Hello everybody, this is Lara with your end of the week video for US oil for the trading week ending Friday 5th of February 2021. Upward movement continued and passed my target, which was at 55.40. It continues and the structure is incomplete, so I've calculated a new target. It's at 58.41. About that point, I'll be expecting a multi-week pullback or consolidation to begin. We can use a channel to indicate when that may have begun. When that channel on my daily chart is breached by at least a full daily candlestick of downward movement below and not touching the channel, that would be a pretty strong indication there's been a trend change. A new low below 53.24 would also be a strong indication of a mid-term trend change. My analysis for US oil remains very bullish because from this high to this low, this structure fits as an Elliott Wave corrective structure or a counter trend movement for the even bigger picture beyond the monthly charts. It's not possible to see this downward movement fitting as an Elliott Wave motive structure, so it can't be a first, third or fifth wave, and for the bigger picture that just wouldn't make any sense anyway, because prior to that upward movement came from lower lows. And so the bigger picture I am labelling for oil as an incomplete 5-wave impulse with supercycle 1 here, supercycle 2 over here, and supercycle 3 beginning here. And when 3 is done, there'd be 4 and 5 to complete that simple 5-step forward pattern, the basic Elliott wave structure. So I'm seeing this as a second wave structure, and it subdivides very well as a double zigzag, W, X, Y. The third wave needs to move beyond the end of the first wave, and it needs to move far enough above there to allow room for a subsequent supercycle degree fourth wave to unfold and remain above first wave price territory. Supercycle 3 may only subdivide as a 5-wave impulse. At cycle degree, I'll label it 1, 2, 3, 4, 5. I have an alternate weekly chart which sees cycle 1 incomplete, where I move the degree of labelling here down 1. If cycle 2 is yet to unfold, it may not move beyond the start of cycle 1 below 10.24. The only way supercycle 2 could continue even lower would be as a very rare triple zigzag. They're quite rare structures, and there really isn't a lot of room for a third zigzag to move into. Let's take a look at the weekly chart where this low here for supercycle 2 is this point down here. From this low on up, this may be cycle wave 1. Here we may have a zigzag complete for cycle 2, and cycle degree wave 3 within supercycle 3 may have begun here. The target for this wave count at the weekly chart level is for cycle 3 to reach 2.618, the length of cycle 1, at 121.43. That's the ratio I'm using for that target, despite the shallowness of cycle 2, because it looks at how far I expect supercycle 3 to get up to at the monthly chart level. Within cycle 3, no second wave correction may move beyond its start. Let's take a look at this at the daily chart level, where cycle 2 down here is this point down here. I had a little play with trying to label this differently, and because of the overlapping in here, I'm at this stage unable to see a different way of labeling. I wanted to see if intermediate 3 and 4 could be up in here because the proportions look quite good. But I've concluded I want to see intermediate 3 here so that this is the middle of the third wave, because now we don't have overlapping fourth waves into counterpart first wave price territories. I'm sorry, that's a little bit complicated, but just suffice to say I did take some time to try and see an alternate way of labelling this, and I have not at this stage been able to find anything that I'm prepared to publish. And so this remains at the daily chart level the sole wave count for US oil. The alternate is pretty much the same. It would just see all the subdivisions labelled in the same way, except the degree of labelling would all just be 1 degree lower. An impulse beginning here may be incomplete with 1, 2, 3, 4, 5, and 5 extending. 1 is not extended, 3 is extended, and 5 is extending. The target is now for 5 to reach equality in length with 3, for them both to be extended. Within intermediate 5, 1, 2, 3, 4, 5, and minor 5 looks like it may be extending. 1, 2, 3, 4 may not move into wave 1 price territory, and then 5 should unfold. If we see this channel breached by at least a full daily candlestick below and not touching this lower edge, that would be a pretty strong indication that this upward trend should then be over and the next big pullback should be underway, which for this wave count at the daily chart level may not move beyond the start of primary 1 below 33.65. For the short term, if we see a new low below 53.24, it can't be minute 4 because minute 4 may not move into minute wave 1 price territory below this price point. And so prior to new highs and prior to the structure completing, if we see a new low below this point, that would also be a strong indication of a trend change. If that happens prior to the structure completing, then I would have to label primary wave 1 over at this high. At the weekly chart level, if we move the degree of labelling all down 1 degree, then cycle wave 1 may be incomplete with primary 1, 2, 3 to complete, and then 4 and 5 to complete. The target for primary 3 is for it to reach 1.618, the length of primary 1. When primary 3 is complete, primary 4 should unfold and must remain above primary 1 price territory, and then primary 5 should move beyond the end of 3 to avoid a truncation. For this wave count, when cycle wave 1 is a complete 5-wave impulse, then a multi-week or multi-month correction, possibly even a year or more of downward movement, may begin for cycle wave 2, which may not move beyond the start of cycle wave 1. At the weekly chart level, another strong upward week for oil with support from volume is bullish, supports the idea that next week we'll probably see more upward movement. ADX at the weekly chart level still indicates an upward trend, which is still in a relatively early stage. There's a long way to go before this trend would reach extreme. On balance volume at the weekly chart level has no new range. RSI is moving just into overbought territory. It can certainly reach more deeply overbought and remain there for longer before the trend would be in any danger. When RSI is extreme and ADX is extreme, then I would be more concerned about this upward trend. I am not at this stage, and it's likely to continue. Stochastics is overbought, but that can remain overbought for a long period of time. At the daily chart level this week, we saw a few days in a row of upward movement for oil, but overall volume seems to be showing some decline, and the candlestick's real body size is getting smaller, and so this completes an advanced block pattern. It's a variety of the 3 white soldiers, but with the declining size of the real body of the candlesticks in the second and third candlestick, it tells us that bulls are weakening, and it's not a reversal pattern, but it just tells us to be concerned that we may see some pullback or a potential change, but it's not a bearish reversal pattern. It just sounds a warning signal. ADX is again increasing. It's well above both DX lines, and so it tells us again there's an upward trend, but the upward trend is extreme, not very extreme. If it reaches 45, then it would be very extreme. So there's still room for the upward trend to continue, but we are moving into, at the daily chart level, extreme territory. The last signal given from on-balance volume was bullish. RSI is again overbought. It can reach more deeply overbought and remain there for longer before the trend may end, but it is starting to sound a warning that this trend is becoming extreme at the daily chart level and stretched. Stochastics is overbought, but when this market trends, it can remain overbought for a long period of time. We use this for a consolidating market, not a trending market. And MACD gives us a bullish crossover. That's all from me this week with your oil analysis. I hope all our members are having a fabulous weekend.